The ongoing war between Israel and Hamas has escalated into a full-fledged conflict, threatening to destabilize the geopolitical scenario in West Asia. Palestinian terrorist group Hamas on 7th October 2023 launched rocket attacks on Israel, killing hundreds of civilians. In retaliation, Israel approved significant military steps and launched airstrikes on Gaza, intensifying the conflict. Over 1,500 people have died so far on both sides. West Asia is a major global oil producer and supplier, accounting for nearly one-third of the world's oil reserves. Any conflict escalation threatens global oil supply stability. The Israel-Palestine conflict has emerged as a latest geopolitical flashpoint, rattling the global economy, which is already grappling with high inflation. As the two sides engage in intense warfare, concerns are rising about spillovers through channels like elevated oil prices, supply disruptions, and financial market volatility. Watch this video further to know about financial fallout of the Israel-Hamas war. Indian companies like TCS, Sun Pharma, Adani, Wipro, Bharat Forge, SBI, L&T, and Infosys have small operations in Israel, employing a few employees. While these operations are located away from the conflict areas and employees are safe, the companies are closely monitoring the situation as it remains fluid. TCS has a small employee base in Israel overseeing local operations. Air India evacuated its crew members from Tel Aviv and cancelled flights till October 14th. Bilateral trade between India and Israel was $10.77 billion in fiscal year 23, with India exporting $7.89 billion and importing $2.13 billion of goods. In addition, services trade valued at $1.1 billion. Over 300 Israeli investments are in India, mainly in high-tech agriculture and water. Shipping goods to Israel may become costlier due to higher insurance and freight costs amid the conflict. The impact on Indian core sector companies is limited to higher oil prices. Adani Ports has business continuity plans to respond effectively to any eventuality arising from this situation. Sun Pharma, subsidiary in Israel, noted that insurance may not fully cover losses during disruptions. During initial strikes, Brent crude prices surged over 3% to near $88 per barrel due to perceived supply risk from West Asia. Although it has come down a bit and is now at a bit above $86 per barrel, any further escalation will again result in increased prices. Iran's involvement in the ongoing conflict can endanger the Strait of Hormuz, a key oil route. This may push prices above $90 per barrel, threatening global inflation. As a big oil importer, higher prices will distort India's trade balance and currency stability. RBI may need to intervene to curb the rupee's fall. Madan Sabnavis, chief economist at Bank of Baroda, said Brent crude oil price had crossed $90 per barrel previously but has now retreated. He believes $90 can be considered the threshold level, above which will cause trouble for the global economy. Sabnavis added that India too would be impacted if prices remain elevated due to further supply disruptions. He noted that Iran entering the conflict could affect key sea routes, pushing up transportation and insurance costs. This would distort India's trade and current account balances, putting downward pressure on the rupee. Escalating crude prices feed into higher production costs and input prices across sectors globally. This puts upward pressure on already elevated inflation in major economies like the US, India, and China amid tight monetary policies. Kanika Pasricha, an economist, highlighted concerns over further escalation of the Israel-Hamas conflict. She noted that the involvement of other key oil-producing Middle Eastern countries could severely impact the global crude supply. This would drive oil prices significantly higher, exacerbating inflation. Central banks are already battling high inflation through interest rate hikes. Wider military engagements in the oil-rich Middle East risk derailing their efforts to normalize prices. With tight financial conditions due to higher rates, geopolitical risk in the Middle East also threatens the economic recovery. As such, Pasricha stressed the need for very close monitoring of developments in the region. Bilateral trade between India and Israel is so far unaffected, but supply disruptions may arise if conflict persists. India imports $2.3 billion worth of machinery and diamonds from Israel while exporting $8.4 billion of refined oil. Rupee instability due to crude rise poses risks. Import costs may increase for both countries. Investors are shifting funds to safe assets like gold, dollar, yen, and bonds on risk aversion. FII outflows from India may continue due to crude inflation linkages and global bond yield uptick. Indian markets may see bouts of volatility but no major declines unless conflict widens rapidly. VK Vijay Kumar, Chief Investment Strategist at Geojit Financial Services, has advised caution at this time. He said investors should refrain from taking large risks and wait for developments in the Israel-Palestine conflict to unfold. However, Vijay Kumar suggested that long-term investors can gradually accumulate quality stocks as prices decline during this period. The Israel-Palestine war has significantly escalated global economic uncertainties by threatening an important oil-producing region. While direct impacts may be limited if the conflict remains localized, wider hostilities carry major inflation and market stability risks. Policymakers must closely monitor developments and their second-round effects. If you like this video, kindly subscribe to our YouTube channel and also do not forget to follow us on Twitter, Facebook and Instagram.